The only reason that it makes sense to suppress silver that way, to the point of throwing a head trader at JP Morgan in jail and still allowing their company to be that year that they did that they paid the $920 million fine, the JP Morgan metals desk made $1 billion. So they walk away 80 million up. They're traders in jail, and they're still allowed to be the custodian of the world's largest silver trust and the fourth largest gold trust. Who's partnered with JP Morgan in SLV? Oh, that's none other than BlackRock. So you have these very big players, these insiders, suppressing the price of silver, and I believe it is so that they can continue to make weapons.
Gold prices witnessed their best monthly performance since March on Wednesday, driven by geopolitical concerns and expectations of an interest rate cut in September, with attention turning to the U.S. Federal Reserve's upcoming policy decision. The silver market rallied a bit in the early hours of Wednesday, breaking above the crucial $28.50. Spot silver rose 1.6% to $28.83 per ounce, but is on track for a second consecutive monthly loss. Bank of America believes silver is likely to outperform gold due to its greater sensitivity to manufacturing activity. Andy Schectman, president of Miles Franklin, explained that gold is tied to the bond market and the dollar, representing the overall strength of the Western financial system. However, he emphasized that silver is far more strategic, being essential for sustaining the numerous conflicts worldwide. Schectman argued that major players, including JP Morgan and BlackRock, are actively suppressing silver prices. These insiders are suppressing the price of silver so they can continue to make weapons, he added. It's common within the silver investing community to hear about the possible manipulation and suppression of the silver price by the powers that be. JP Morgan Chase's involvement in the silver market has long been contentious. Over the past decade, the bank has admitted to 5 felonies and paid over $1 billion in fines for various offenses, including a $920 million fine for manipulating the precious metals markets. Despite the bank's public denials, suspicions persist that JP Morgan is manipulating silver prices. The roots of silver market manipulation may go deeper than JP Morgan Chase. Andy Schectman finds it astonishing that 8 commercial banks hold such concentrated positions in a commodity that the world is accumulating. He broke down a piece of news, revealing that China is buying up all the doré bars in South America in silver, paying significantly more than the West. Schectman explained that China is making these purchases because they understand the importance of silver. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
In this environment, to have 8 commercial banks have that concentrated of a position in a commodity that the world is accumulating. We just found out that China is buying up all of the doré bars in South America in silver. And those doré bars that they're paying way more than the West will pay for it, they're scooping it all up, sending it to China and refining it there. And that does not affect the silver price because it's not refined. So it's unrefined silver. They're paying way more than the West is. And this has been verified by several sources, including sources at First Majestic Silver. This is a situation where the Chinese understand what is happening, and they are using this suppression against us, whether it be by draining the LBMA, which has its lowest amount of silver in 140 years, draining the COMEX, which continues to see gold and silver be delivered off, backdooring it out of the ETFs because only the very large basket participants are able to take metal out of the ETFs. If you're a sovereign wealth fund, you can do that. And at the same time, look at the Shanghai Metals Exchange. Their silver is literally falling off a cliff at a 45-degree angle. The only reason that it makes sense to suppress silver that way, to the point of throwing a head trader at JP Morgan in jail and still allowing their company to be that year that they did that they paid the $920 million fine, the JP Morgan metals desk made $1 billion. So they walk away 80 million up. They're traders in jail, and they're still allowed to be the custodian of the world's largest silver trust and the fourth largest gold trust. Who's partnered with JP Morgan in SLV? Oh, that's none other than BlackRock. So you have these very big players, these insiders, suppressing the price of silver, and I believe it is so that they can continue to make weapons. And countries like India and China know what we're doing. India has imported over 700 million ounces of silver in the past 2.5 years from the West, and they just bought over $1.5 billion worth of silver from the UAE because they have a treaty with the UAE that allows them to import silver at a much lower duty import tariff. And this is, again, these BRICS countries using it against us. Why would China go into South America and buy up all the doré bars and pay hundreds of dollars per ounce or per ton more than the West would? I mean, way more than the West would ever do it. And they're scooping up all the doré and refining it there. Why? Because they understand the importance of silver, and the military industrial complex has been controlling it for a hell of a long time. And that's why they're doing it. Gold is more of an issue of the bond market and the dollar and the big picture strength of the Western system. But silver is a whole hell of a lot more strategic, and they're using it because it's needed to continue the endless wars that we are part of all around the world.
The gold market is seeing some safe haven demand amid heightened Middle East tensions. A dovish lean by the Federal Reserve this week is also a positive for the precious metals market bulls. Gold price is gathering pace to resume the recent upside early Friday, following a flattish close on Thursday. According to Andy Schectman, the real price of gold and silver hasn't been fully priced into the market yet. He believes that the prices of gold and silver are managed by commercial banks. That's the truth of it, Schectman said. The commercial banks control the price of gold on the COMEX. However, that's ending because big money across the globe understands this. Let's now turn our attention to the video again.
I don't think that's really been priced in as much into the gold market because, again, fine line between conspiracy and reality. But when you take a look at what has happened, in fact, let me just read to you exactly, if I have it here, what has happened with the price of gold. Price of gold and silver are managed by the commercial banks. And I mean, that's the truth of it. The commercial banks are the ones that control the price of gold. It's controlled on COMEX. That's ending because the big money across the globe understands this. The central banks have been using the Western suppression against us for a very long time. They know this. In fact, I've said before, the head of the Shanghai Gold Exchange says, when the real price of gold, when China is allowed to speak at the table, the real price of gold will be observed. They talk about the new grain exchange that they just developed, the BRICS grain exchange, and they say, we produce more grain and soft commodities than the West does, yet we have no control over its price. It's all controlled on COMEX. That will change with the new BRICS grain exchange. They understand that we have been controlling the paper price of all of these commodities for a very long time. But I'll give you an example of what just happened. I see if I can pull it up here. I was just reading it. There's a tremendous amount of short covering that has happened on the market. And I just want to find it. I'm sorry I don't have it at my fingertips. Okay, here it is. So the Commitment of Traders report just showed that the managed money crowd for gold and silver futures have been fleeced. That was the gist of it. And the gold longs sold 4.488 billion in long futures, silver longs 1.7 billion in futures. These are the managed monies. And so leverage is a double-edged sword. So look, here's the deal. The commercial banks, what they do is they suck in the speculation. They let the price run, and they will suck in all the managed money, and they'll absorb all of that buying pressure. But they have enough money where they are able to sell into a rising market. Very dangerous thing to do. Most people, when they short, think AMC and GameStop, they short a falling market and pile on, right? It's like, when you played tackle football with your buddies in elementary school, everyone would jump on, pile on, hog pile. Well, that's what normal people do when they sell short. The commercial banks have enough money and really unlimited amounts, and they do it in a collusive manner where they are able to absorb all of the buying pressure, let the price rise, and then start to sell and overwhelm the buying pressure and drive the price down. As they drive the price down, all of those longs and all of the options expire worthless, and you get all of the managed money that end up jumping ship. These hedge funds do not have a high pain tolerance. So as the price starts to go against them, they jump ship. When the longs sell their longs and cover their shorts, in other words, they're getting out of their short position, they're selling their longs. The opposite side is the commercial banks. They're taking those longs and they're going longs. The commercial banks, and maybe this is the time, who knows? will flip-flop and they won't short a rising market. They will push all of the managed money to the other side of the table, as right now they're in the process of moving to that side of the table. And they won't let the price, they will not let the managed money back into it. In other words, managed money will go short. Right now, when the managed money sells their longs and buys shorts, the commercials are taking the other side. And that's what has happened. So the commercials drive the price down. They cover their shorts on the way down. They take the long positions and take the opposite side of the managed money short position. So they're net long.
Gold and silver showed significant price volatility, gaining in the early trading session but unable to sustain higher levels. Heightened tensions in the Middle East, following an airstrike in Iran and Lebanon that killed top Hamas and Hezbollah officials, bolstered the safe haven demand for gold. The top countries for gold production are poised to benefit from the current gold bull market, as are the gold mining operations in those countries. Citi analysts predict central bank gold demand will remain high in 2024 and 2025, citing trends of de-dollarization, reserve diversification, and alternative fiat demand among emerging market central banks. What's next for gold and silver? We want to hear from you. Feel free to leave your thoughts in the comments. Give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.